Ladies and gentlemen, remember, we have what we call a learning management system. This learning management system is a game changer to you, to your studies. Actually, if there is a college which is running out here without a learning management system, I'm telling you, I mean, people will suffer. Why? Let me just explain why I'm saying people will suffer. If you don't know how to use a learning management, even if we have these elements ourselves, and you don't know how to use it, you'll as well suffer. You will suffer. You will suffer. This is a game changer. So that I'm sharing my screen, ladies and gentlemen. Yeah, that's my screen. So then how do you access this learning management system? It's very easy. You simply go to our website. You simply go to our website, which is www.rcm. It's actually there, online college.co.ke, like that. So once you enter, you will be able to get this kind of what here, a face here, right? And then of course you're looking for this CPA. Yeah, so you go to CPA, you click CPA there. And once you click that CPA, then you'll be able to go to what we call CPA advanced level. You go to CPA advanced level. I hope somebody is able to do it with me. You go to CPA advanced level. So this CPA advanced level, the CPA advanced level, once I click on it, I'm able to see all the subjects here. All right. So like, the subject that I'm teaching you here is advanced financial reporting and analysis. So you click on advanced financial reporting and analysis. For me, I'll be able to go straight away to this paper live because I'm already registered. Some of you are not registered, so you have to follow through the process, the registration process. All right, of which I've given you very many videos. If you look at your WhatsApp, there are videos that are giving you how to register. And then in this case here, when you come here, if you are my student, this is where you'll be getting your Zoom live classes. The live Zoom classes, if you click on this, all right, if you click on this, you'll be able to see here, if you are in the evening group and you would want to join the evening class, we are not going to be sharing these links the way we share there because we are also aware that there are many students. In this case, you just get those links and they share with their friends. Yeah, all right. And then, of course, if you want to join, like now my class, the morning class, you simply click on this and you get to class. So this is really a system that we want to ensure that we follow through, especially from next week. From next week, we shall not be sharing our class links in WhatsApp. All of us will be attending our classes using this learning management system. Now, ladies and gentlemen, please listen. When you are here, you'll be able to see AFR complete syllabus. AFR complete syllabus by Dr. Aura here. So this is what you click here. So when you click this one, my friends, when you click this one, you will now be able to get all the videos. You'll be able to get all the videos, capturing more than the entire syllabus, all the videos here, all the videos capturing the entire syllabus. Now, please listen very well. Remember, like now yesterday, I had sent you to go and watch a particular video before today's class. So before today's class, we had agreed that you guys were to watch this video here. All right? This video here. All right? And then, of course, I expect you now moving forward, given that you will have known how to navigate here, you will not be waiting for Mwalimu even to tell you. These videos have a pattern. They are following each other. So in this case, I expect somebody like now tonight, you watch this. Now you keep on now watching. You simply come and pick any video, not any, but in that order. Right? And then, of course, as you progress, you can see here it is written 0% complete. It's written 0% complete. As you progress, then the percentage here will be showing. As you keep on watching, the percentage will be showing that, hey, this ninja is making what he's making progress. And then once you hit 100% complete, you will be able to get a certificate automatically. It's an electronic certificate that you'll be able to even mount on your LinkedIn. All right. In this case here, it's a certificate of completing. It's a certificate of completion that you've been able to attend advanced financial reporting classes at RCM College for how many months? For 3 months. And I can tell you that can really change things. I've seen those certificates in this case here working for many, many students. So long as in this case here, you are able to watch this thing to 100%, then you get automatically what here? A certificate of participation in this training called Advanced Financial Reporting with my signature down there. And that is why when you are registering in the LMS, you must give out your names in the way they are appearing in your ID card or on your passport. Because we can't change, when that certificate comes out, we can't change it. All right? But unless again you start watching the entire thing from 0 to 100%. All right? Would want in this case here, by the time you're finishing your studies with us at RCM, you should be having very significant, certifications here that you can put on your CV. Before even 𝒂𝐿𝐴 gives you, like now our certificate here will be able to basically show that you are a financial reporter. All right? You're a financial reporter, even if you have not, for example, in this case, you have gotten certification from 𝒂𝐿𝐴, but at least you have attended classes. That can change things. And right now, RCM is a brand. When people start seeing that you have got certificate from RCM, then automatically you'll be able to do what here? You'll be able to do very well. But the most important thing, ladies and gentlemen, is that the setting of exams has really changed. And this setting of exams, the way it has changed, it needs us to hold hands and we walk together. Here we are holding hands and walking together, meaning that the student has got what they have to do and the teacher has got what they have to do. Nobody in this case will be able to do these things on their own and then they perish. Trust you me, even those errors where students used to read by themselves, now they are gone. Those errors where Mwalimu used to do everything by himself, in this case here, that error is no longer there. It has to be you and me holding hands, working together as we do this subject. Yes, I see some of you haven't yet registered. Please ensure that you are registering. And now, fortunately, initially we had also issues in terms of what here, in terms of this system. It's a big thing, all right? So like initially, it's only one person who could add people on the LMS. But now yesterday, our developer has been able to enable, like now me, I can add now, all right? So then in this case here, what I would want us to do after our class, you need to register. And then there is something that to show that you have paid fees, so that we can also do what here, we can also now come at the background and give you the videos, give you access. There is a Google Sheet. If you go to your class WhatsApp group, and then you click on, for example, that AFR title, you click on it, you'll be able to see LMS Google Sheet. LMS is Learning Management System. Once you click on that one, then you'll be able to get a Google Sheet that comes there. Once you fill it and it's coming from that class, I'll automatically know that you have paid fees. And you fill that form for each subject that you're doing with us. You can't just fill once and then you call and say that I've filled. No. You have to fill for each subject because that's a control. It's an internal control. All right. So then let me get, in this case here, to know whether there is anybody now who was able to watch the video that they were given. Anybody who was able to watch the video that they were given yesterday to watch, please respond there. Do we have anybody who was able to watch, like Njeri watched? Igamba, great. I watched, great. Yeah, Kate watched. Taylor, great. 𝒂𝐿𝐴, Cecilia. All right. What speed were you guys watching the video at? Of course, it was your first video, so perhaps you're watching at a normal speed. But just out of curiosity, is there anybody who was able to watch at 1.5 speed? Anybody who was able to watch at 1.5? 1.25? Okay. Yeah, because again, the videos, unlike now what you're doing here, those videos, you can watch them at a higher speed and therefore you save time. And we agreed, at the very least, we said use 1.25. No student of Dr. Aura will ever watch video at a speed of 1. And I normally sympathize. Even at times, ladies and gentlemen, when we go to some of these public spaces, you get somebody, for example, watching a video of, say, JKL video, and the person is watching this video at a speed of 1. You're wasting time. Those videos, especially the social videos, I mean, I will watch them at a speed of 2. All right. All right. Utaanza kuwatch videos zingine, unawatch video kama nani sasa, kama ya demo wa Facebook. Unawatch na speed ya 1. Unaua 2 hours. All right. International disaster. International disaster. These things, you watch them at a speed of what here? At a speed of 2, if possible, because they're very useless. They're very useless. They are there to waste your time. Waste your time. They're there to waste your time. They're there to waste your time. All right. So, ladies and gentlemen, you're overcoming. So then, how many of us up to date, they don't have access to this learning management system? Because if you don't have access to this learning management system, I'm sure, given the style you're going to use, utakuwa na shida mingi sana. Utakuwa na shida mingi sana, because now we are not going to be teaching like in normal. No. No, we are changing because we want, because right now we have the biggest following, I mean, in East Africa, as a CPA college, we must change. We must change. So that if you don't have access to these videos, ensure that you register the way we have said in the 2 areas. Register in the system here, and you register in the Google Sheet, and then I'll be able to connect you. Now that some of you have not yet watched this video, now you are making my life to be very, very hard. We have access, but under profile, there is no data. Yes, it's because Faith have not connected you from the background here. So chances are, Faith, you have not filled up the Google Sheet. If you fill the Google Sheet, I'll be able to see it here live, and I'll be able to connect you right away after my class. There is a Google Sheet in your class. There's a Google Sheet in your class, WhatsApp group, and I'll be able to see your name and email address. Yeah, very good. Monica is saying we have access, but work hours. Okay. Monica, for sure you have to create time. There is no any other option. You must create time, because you don't have time really. You just create time and watch at least 1 video a day, Monica. Imagine if you do it 1, then you will be able to do what here? You will be able to. Yeah, Hilary, then you are not following. Hilary, the moment you just fill this thing, and then you fill what here, then you fill the Google Sheet, and be able to see from the background. There are students who buy those videos directly from the website. So that thing of being asked to pay money, that will always be there. But once you do your part, you fill the website information, and you fill the Google form, already you have paid us. We shall be able to approve. So then we are looking at this IAS 36. Impairment of what here? Impairment of assets. So when we talk of, ladies and gentlemen, impairment, we said to be impaired. To be impaired means what? That you have lost value. You've lost value. That is the major thing for you to remember, that impairment loss is a loss in value. And remember, this is not your depreciation, no. This is not your normal depreciation, no. I even went ahead and I gave you a formula of getting this impairment loss. Please listen. How do we get this impairment loss? Is there somebody who is able to remember the formula? Impairment loss. I'll be able to address those questions. Impairment loss equals what? Somebody who is able to remember. CAR minus RA, great. It is CAR minus RA. So remember, this CAR stands for carrying amount. This stands for carrying amount. This stands for carrying amount. And RA stands for what we call recoverable, what here? Recoverable amount. So remember, carrying amount is also known as net book value. By the time you're getting carrying amount, we have already subtracted depreciation. So impairment loss now will be happening post depreciation. So to get, anytime they want us to get impairment loss, okay, yeah, we shall be able to address all those. Please, I would want you to give me like a minute. I explain something here, and then we'll come back with those. I'll give you a Q&A session, so you don't look like you don't have your questions. I would want us to come back here All right, so we now focus here. Then later on, I'll give you a Q&A question. Does that make some sense? Regarding system and whatever. Regarding system and whatever. Does that make some sense? Does that make some sense? And now we are here. We're asking questions about what your impairment loss. All right. So let's come here that anytime they want us to get impairment loss, we take carrying amount minus recoverable amount. So this is carrying amount, this is recoverable amount. And I told you, ladies and gentlemen, that anytime they ask you any question about impairment loss, then you must always draw something. Very important. You must always draw something here, very important. You must start by putting this. So this is CAR, and this is recoverable amount. And it doesn't stop there. Recoverable amount, you must compare in between two things. So recoverable amount, you are comparing between two things. Is there somebody who is able to remember the two components? Those things that you must look at. Whenever you want to ascertain, like, how much shall we recover? How much shall we recover? So yes, so in this case here, it is view, and then we have the net selling price. Please write like this. View is value in use. Value in use. This view stands for value in use. Value in use. And then we have NSP is the net selling price. The net selling price. Also known as a fair value less selling costs. 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 So could you kindly give me a signal once you're able to write up to here, once you're able to draw up to here, because this is very important. Whenever given a question on impairment loss, it will be very important for you to compare the two, to draw this. So once you draw up to here, please give me a thumbs up. Give me a thumbs up. Mauricia, great. I can see Mauricia was my exam student. She knows how to dance, especially when you dance in the morning like that. It's very good. It's very good. Thank you so much. Thank you so much. So then remember, if, for example, ladies and gentlemen, we have here value in use is 10, value in use is 10, and then this asset you can sell it for 8. You've got two options. So remember, there are two ways that you can recover money from your asset. Number one is to use this asset, generate cash flows. These cash flows are the ones you discount to get what we call value in use. Value in use. The recoverable amount, that amount will be able to get by utilizing this asset. Or we can say to help and sell this asset. This asset, for example, it's a matatu that I can easily, in this case here, get, for example, 2 million, but there's a ninja in the name of a sales agent who tells me out of 2 million, I need 200,000. So then in this case here, the net selling price will be the selling price you've gotten minus all the incidental selling costs, agency, etc, like that. Now, so between the two then, what do you think will be the recoverable amount? Because the recoverable amount, you compare between the two and pick the higher, the best. You pick the higher. In this case here, prudently, if I'm prudent, of course, I would rather now then continue using this instead of selling and get 8. So in this case here, the recoverable amount will be the higher of the two. So in that case here, I'm going to work with 10 there. I'm going to work with 10 there. I'm going to work with 10. So recoverable amount, we shall always compare the two and pick the higher. You may forget about everything else that I've taught you, but you shall never forget that anytime you want us to give them recoverable amount, I'll always compare the view and the NSP and pick whichever is higher. Whichever is higher. Now that some students never watched the video, you'll just give me 5 minutes to mention something here about value in use. Within 5 minutes, I should be able to clear this. So we have here value in use. So remember, value in use, we ascertain value in use by discounting future cash flows. future cash flows by discounting future cash flows. We ascertain value reduced by discounting future cash flows, by discounting future cash flows. Remember that there are two types of cash flows. Do you remember them from your video? Do you remember the types of cash flows from your video, from your LMS video, Learning Management System video? There are two types. There are two types of cash flows. Do you remember them? There are two types of cash flows. We have in this case here what we call irregular. And then number two, we have what we call the regular. So these regular are also the ones we call annuities. Irregular are non-uniform. And now the most important thing is for you to appreciate how do we discount the two. If it is irregular cash flows, we shall be using what we call PVF. If it is irregular cash flows, we shall be using what we call PVF. If it is regular cash flows, then we shall be using what we call PVFA. So we have PVF, and then number two, we have what we call PVFA. PVF and the PVFA. Remember that PVF is present value, interest factor, and then PVFA is present value, interest factor over an annuity. Just once you reach here, so I don't take you guys with a very, very high speed. I don't want to be a very fast teacher, but once you reach here, kindly just give me a signal. So anytime we talk about irregular cash flows, irregular, like today you are getting 10, tomorrow you're getting 12, another day you are getting a different amount, then that one you shall always use what we call PVF, present value interest factor. This is regular. But if in this case, ladies and gentlemen, you get a situation where today you're getting 10, tomorrow 10, the other day 10, regularity, uniformity, we shall be using present value interest factor over annuity. Please listen, ladies and gentlemen, listen to me very well. Anytime in this case here, you get this kind of an example. So for example, we have our cash flows here. So we have 1, 2, 3. So here we have, for example, 12, 18, and then 20 like that. And then they give us the COC. COC is 10%. They give us COC, which is what here? Which is 10%. COC. COC stands for cost of capital. COC stands for cost of capital. And then now we are required to determine the discounted cash flows, what we call DCF, also known as total present value. Also known as total present value. So you're given an asset. This asset in the future from end of year 1. This asset will give us 12. End of year 2, 18. End of year 3, 20. 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 And then we have here COC is cost of capital required. Determine the discounted cash flows. Determine the discounted cash flows. So the first thing I have to recognize is that these cash flows are what type of cash flows? They're irregular. And if they're irregular, then the very first thing that I need to come and do is to remember that the irregular cash flows, the discounting factors will be PVF. The discounting factors won't be PVFA, they will be PVF. They would have been PVFA if it was an annuity. So here I'm going to use PVF. And for me to use PVF, my friends, PVF, we know the formula, it is 1 plus R raised to negative what here? 1 plus R raised to negative N. The formula of PVF is 1 plus R raised to negative N. What is our R? Our R is the required return. Our R is the 𝒂𝐿. You know, what those guys need as their return, to us, it's a cost of capital as a company. To us, it's a cost of capital as a company. So then you'll be able to come and give us here PVF, which will be 1 plus R. Oh yeah, at our only R in 10%. You see, 10% is the same as 0.1 raised to negative n. Meaning, ladies and gentlemen, that the first one here will be 1.1 raised to negative n. N is the year, the time period. So raised to negative 1. So this will be 1.1 raised to negative 2. This will be 1.1 raised to negative 3. You see, in AFR, they will rarely give you, I've never seen them giving tables. At times, they'll be able to give you these discounting factors in the question. But in AFR, we must cram the formula. 𝒂𝐿𝐿 𝐸, we have the first one, 𝒂𝐿𝐿 𝐸. Yeah, I see so many questions here, really. We'll be able to address them. So the first one is 0.9091. The first one is 0.9091. The first one is 0.9091. The second one, please here participate. Everybody should be able to participate here. Everybody should be able to participate here. We have a Gamba 0.8264. 0.8264. 0.8264. Everybody should be able to participate. Everybody should be able to ask questions. 0.7513. So we have here 0.7513. So then I need to create the last column where you capture the discounted what-year cash flows. Where you capture the discounted cash flows. So discounted cash flows, what do we do? Like now you take this. Discounted cash flows, you simply take the cash flows multiplied by their discounting factors. So we have like 12 times. Please give me this in terms of 2 decimal places. In terms of 2 decimal places. In terms of 2 decimal places. So the first one I'm being told is 10.91. 10.91, thank you very much. Then we have 18 times this. 18 times this. What are we getting there? 18 times 0.82 per 64. Now, it's only one student who is giving me these answers, really, which makes me think that I'm too fast, which is really very bad. It's very bad on my side. If I'm that fast, I would rather just move a little bit slow. The very best way of getting feedback is to get answers from you. To get answers from you. $15.03, and then there is someone who is giving me the total discounted cash flow. Total discounted cash flow, total discounted cash flow. They're giving me total discounted cash flow, total discounted cash flow, and you add the 3. $40.81. And the Taylor, you have to forgive me. I think I can't hold this anymore. Taylor, if you don't mind, I'm quite inquisitive. Taylor, if you don't mind, could you kindly tell me this initial MST, what does it stand for? I'm now tired of, asking myself something that I would never. This MST, what does it stand for? The title before your name. Ama we shall overcome. 40.82 or 81, 82. So in this case here, yeah, it's 2. I don't know if that's allowed. That is allowed. That is allowed. Ah, okay. Great. Okay. So when we have here, DCF stands for discounted cash flow. Discounted cash flow. So basically, this will be our value in use. This total discounted cash flow, the total PV, 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 total PV, the total PV, the total PV is the same as value in use. Is 40.82. Thank you so much. Example 2. Example 2. Right there. Example 2. So example 2, ladies and gentlemen, what do we have? Under example 2, we have years 1, 2, 3, and then we have our cash flows. Our cash flows are 15, 15, 15. 15, 15, 15. And then we have our 𝒂𝐿. Our 𝒂𝐿, let's use 10%. Our 𝒂𝐿, let's use 10%. our COC, let's use 10%, and then we are required, ladies and gentlemen, we are required to determine the total present value. Total present value. What in AFR they call value in use. Determine the total present value. What in finance they will call the value in use. The value in use. Is there somebody who is able to make a comment even before I continue? What do you imagine of this 15, 15, 15, 15, 15, 15, 15, 15, 15? 15, 15, 15, 15, 15, 15, 15, annuity, yes, it's an annuity. But then first of all, before I show you the concept of annuity, you know, this one, you can still go ahead and use PVF. You can still go ahead and use PVF at 10%. You can decide to handle these figures independently. You can decide to handle these figures independently. So if you use PVF independently, will we get the same answer as we would have gotten if we used PVF? Oh, yes. Yes. Yeah, I'm treating figures as if they are what independent. So then are you able to give me this? Please remind me. Yeah, -1. We had 1.1 minus 2, 1.1 minus 3. Is there somebody who is able to do that? These are what here regular. I appreciate that. My internet is unstable. You're overcoming with Starlink. Starlink will be the solution. All right. So what do we have here? The first one is 0.1. Yes, somebody. The first one is 0. Yeah, please give me these figures. The first one, 0.1991. 0.1991. How about the second one? 1.1 raised to -2. But I hope now you are able to hear me much better because I can see it is now up and running. 82, 64, 82, 64, 82, 64. How about the third one? The third one, because we're using here 1.1 raised to -2. Monica, remember Monica, we're using PVF. PVF is 1 plus R. I know what you're talking about, but PVF is 1 plus R raised to -n. So 1.1 raised to -2. The same PVFs that we got. So the third one should be 0.7513. So we have here 0.7513. Then come and give me the discounted cash flows. So cash flows with the discounts. So 15 times 0.9091. 15 times 0.9091. 15 times 0.9091. What are we getting, ladies and gentlemen, here? $13.64. And then we have 15 times 0.8264. 15 discounted cash flow. 15 times 0.8264. 12.40. And then lastly, we have here 15 times 0.7513. 15 times 0.7513. Yeah, 11.27. So we have 11.27, and then come and add for us. So come here and add for us. So come here and add for us. Give us the total present value. Give us the total present value. The total present value, which is the same as the value in use. Total present value is the same as value in use. It is 37.31. So people like Monica, they've been able to know something that is very, very important. They've been able to know that Mwalimu, this is an annuity. This is an annuity. Why? Because of regularity. Regularity. And you see, this is only possible. Why? Because these cash flows are very few. These cash flows are very, very few. The cash flows here are very, very few. What if somebody was to give you an annuity for 50 years? Can't use this fact. Where they told us, ladies and gentlemen, where they told us, ladies and gentlemen, where they told us, ladies and gentlemen, that for us to be able to get, in this case here, method two, that whenever we have in this case here an annuity, simply take that one annuity amount, and then you multiply it with what we call PVFA. You simply take one amount, like now 15, and then you multiply it with what we call PVFA. You multiply this with what we call PVFA. Now remember, PVF is 1 plus R raised to negative n. And therefore, PVFA will be 1 minus into bracket here 1 plus R raised to negative n, like that. So you say PVFA is 1 minus this formula. PVFA is 1 minus this PV formula, but everything to be divided by R. Everything to be divided by R. Right? Caroline has already been able to get it. So anytime they want us to give them present value interest factor of an annuity, we'll take 1 minus this simple formula. 1 minus this simple formula, and then you divide this by R. So let's try it in our formula. So we have here 1 minus into bracket. Remember now you can't get PVFA for each year. There's nothing like getting PVFA for each year. PVFA is normally a blanket for all. So PVFA, you look at, you're going to get this 15 for how many years? For 3 years. So you can't get PVFA for year 1, PVFA, no, for 3 years. So then this one here will be 1 plus R raised to negative 3. Sorry, R is 0.1. Divided by R itself, which is 0.1. So then here you have to move slowly and give me the numerator alone. You must move slowly and give me the numerator alone. You say 1 minus, open bracket. 1 plus 0.1, you close. You say raised to negative 3. You say raised to negative 3. Raised to negative 3. So 1 minus 1.1 raised to negative 3. You give me an answer. All right, I want the numerator alone, just the numerator alone. Numerator, because we have to do this slowly. The numerator alone, 0.2487. So 0.2487, like that. 87. And then you come and divide this by what here? By 0.1. So then this will end up being 2.48 what here? 2.487. Say for some rounding off errors, 2.487. And then I'll come back here. What was our annuity amount? It was 15. So you only pick one. The annuity amount here is 15 times now the PVFA that you guys have gotten of 2.487. So then this one here will end up giving us what figure? This one here will end up giving us what figure? It will be exactly the same as the one we got up there, except for rounding off errors, which are normal, which are very, very normal, except for rounding off errors, which are very, very normal. So is there somebody who is able to get an answer that is very close to the one that we got up there, 37.31? I don't know whether that's what we got up there. Something that is quite close. Something that is quite close. Something that is quite close. So is there somebody who was able to get this? Are they very close? Are they very close? Are they very close, or are they worlds apart? Are they very close, or are they worlds apart? Very close, very close, very close. All right. All right. Ladies and gentlemen, you'll allow me to make an assumption, which is quite a bad assumption, but I don't think I've anything much that I can do here. After I've given this background, you'll allow me to make an assumption that at least everybody in this room was able to watch the first video. You'll allow me to make an assumption because I don't want to do the questions that I did in that first video. Even if you never watched, you still have a chance of doing that. So remember, these particular live sessions will be for tips and tricks of how do you pass these 𝒂𝐭𝐮𝐝 exams on your very first attempt. Now, the live classes will not be about like coming to define what impairment loss is. No, that is already in your LMS video. For me now here is to go to the tips and tricks, do questions. So the live classes will basically be like more of what here, more of revision. And that's what I'm doing, ladies and gentlemen. I want you to open your questions paper. We go to this question that was tested in December 2023. December 2023, question number 3C. I've never done this question live. Now I'm doing it live here. December 2023. This is a good thing with this video format of we really have to complement. They will complement each other. December 2023, question number 3C. Question number 3C. Can we have some good students who can easily go and retrieve this question, and then they share this question with us on WhatsApp, or even here, somebody should be able to put this question up here. For those students, because I'm so sure there are students who are coming in for the very first time, the guests, don't forget to sign up for our classes, 0719 525,000, so you can get access to our learning management system videos as well. Because we can't just operate with this. So that's our number, 0719 525,000. And ensure that you become our student, and then you'll be able to get access to these Zoom revision classes and our LMS. So once you guys get a question, I would want to straight away solve it. And the speed I will use, of course, will be quite understandable. You guys will be able to just, even if you never watch the video, you will not be disadvantaged. Down on WhatsApp. Thank you so much. So we are told a division of 𝐒𝐶 Limited. Has the following non-current assets, which are stated at their carrying values as at 31st December 2022. So I can see goodwill of 70. I can see property, plant, and equipment. Under PPE, we have land and buildings, 320. Plant and machinery, 110. Since the assets are used to produce a specific product, it is possible to identify the cash flows arising from their use. The management of 𝐒𝐶 Limited believes that the value of these assets may have become impaired because a major competitor has developed a superior version of the same product. The forecast cash flows, which they would want us in this case here to discount. The forecast cash flows arising from the use of the assets are as follows: 31st December 2023, 1 year later. Remember now, we are on 31st December 2022, given the question up there. So the following additional information is useful. The directors are of the opinion that the market would expect a pre-tax return of 12% on an investment in an entity that manufactures a product of this type. So return is basically our COG. So our cost of capital here is 12%. So 2, the land and buildings are carried at revaluation. The surplus relating to the revaluation of the land and the buildings that remain in the revaluation surplus reserve as at 31st December 2022 is 65 million. All other non-current assets are carried at historical cost. Note 3. The goodwill does not have any market value. It is estimated the land and the buildings could be sold at 270, and the plant and machinery could be sold for 50 million net of direct selling cost. So they want me to calculate impairment loss to be recognized in the accounts of 𝐒𝐻 Limited. In the accounts of 𝐒𝐻 Limited. So at the back of my mind, I know I've got my IL, my impairment loss here. I know I've got my impairment loss, and I know the formula of impairment loss. It is CAR minus RAR. Impairment loss is CAR minus RAR. And then this RAR has got further two components. We have what we call a VU, and then we have what we call the net selling price. Like that. VU and net selling price. So then I'll be able to get this VU first. So we get VU first. And how do we get this VU, my friends? To get this VU, to get this value in use, remember these are discounted cash flows. The discounted cash flows. And unfortunately, we have 3 years. AFR, we'll have 3 years. They'll have 3 years. I can see the cash flows there. I can see 185, 185. I can see 160, 160. I can see 130, like that. These are our cash flows. Our cash flows. What type of cash flows are these? Are they irregular or annuities? They can't be annuities because these are what here? These are basically irregular. They're irregular, yes. So please come and use PV. Come here and use PV. Use PV. At what cost of capital? At what cost of capital? At 12%. At 12%. At 12%. PV, thank you very much. At 12%. At 12%. And if it is PV that they want me to use, my friends, if it's PV they want me to use, my friends, I know the formula. That PV is 1 plus R raised to negative n. All right. Then we have in this case here 1 plus R. Our R is 0.12. Our R is 0.12. Our R is 0.12. Because they've given us the required return there, 12%. Required return there, they're 12%. So 1 plus 0.12. So in this case here, raised to negative n. So then this will be for year 1. It will be 1.12 raised to minus 1. Year 2, it will be 1.12 raised to minus 2. Year 3, it will be 1.12 raised to minus 3. So then are you able to give us these answers, ladies and gentlemen? The good thing that I've been able to discover with this class, guys here are serious. Everybody here is really working out things, which really is a very, very serious tribute. All right? Or attribute. Once you get a class like that, then now everything becomes what here? Easy. Easy. But if you get a class where I have to pick a calculator myself, then automatically that's international what you deserve. Disaster. So the first one, I'm being given here by 0.89, 0.8929, 0.8929, 0.7972, 7972, and then lastly, what we have here, 𝒂𝐿 has even gone ahead to give us 0.711, 0.7118. All right. Then finally give us what we call the discounted cash flows. Discounted cash flows. Now we are taking this 185 times this. You give me an answer. So 185 times this, give me an answer. Okay, 165.19. 165.19. Then we have 160 times 0.7972. 127.55. So we have here 127.55. Then we have 130 times 0.7118. 130 times 0.7118. which gives me 92.53. 92.53. So please come and give me the total present value. Give me the total present value, which will be my value in use. $385.27. 385.27, like that, as the value use. Then, gentlemen, move forward here and calculate for us the net selling price. Net selling price, which is the same as fair value less selling costs. Less any selling costs. So this is very, very important. Is there somebody who is able to tell me, yeah, are you able to see this net selling price? Net selling price, are you able to see the net selling price? So the net selling price, they've given us this in note number 3. Note number 3. Good. Land and buildings will be sold for 270. Land and building will be sold for 270 plus. And then we have machinery going for 50. And these are net over any selling costs. Net of any selling costs. Net of any selling costs. So 250 plus 50, 270 plus 50, I mean. Yeah. So we have here 270 plus 50, which will end up giving us what figure somewhere there? 320, right? So this gives us 320. 320. So up to here, ladies and gentlemen, somehow are we together? Because I don't want to fly alone. This is a big Boeing 777 that would want to fly with all of us in. Are we together up to here really? Pamoja, great, thank you so much. So then what do you think will these two parameters help Mwalimu to ascertain? These two parameters, what do you think will they help Mwalimu ascertain? Yeah, great. But in this case here, recoverable amount, to be able to get recoverable amount, I'll compare the two. You compare the two and then you pick the higher. You pick the higher, you're right. So in this case here, therefore, recoverable amount, therefore, recoverable amount will be the higher of the two, which is 385.27 like that. 385.27 like that. You compare the two, pick the higher always, because it's about common sense. I have assets here. If I continue using this asset, I will get this. If I sell it, I'll get 320. So what is better for me? The higher. And then now once I've gotten this, ladies and gentlemen, I will be able to come here and ascertain the impairment loss. I will be able to come here and ascertain the impairment loss, which is CAR minus RAR. CAR minus RAR, which is CAR minus RAR. Impairment loss is carrying amount minus recoverable amount. Impairment loss is carrying amount minus recoverable amount. Carrying amount minus, is it not 320? I think there's a mistake here. Between the two, between the two, you see this 385, this is more. The value in use is more than, in this case here, the NSP, than the net selling price. So you always pick what you're there, higher. MTK, you always pick the higher. 220, I don't know how you're getting 220, because you see it is 270 plus, in this case here, 50 bob. We are told then note number 3 that the land and whatever will be 270. And then machinery is 50. So if you add the two, you get 320. All right. Then are you able to see the carrying amount of our assets in the question? Yeah, carrying amount in the question given up there before the notes, the very, very first table, where we are told C, a division of Z1 Limited has the following non-current assets, which are stated at their carrying values as of 31st December 2022. Carrying values, total is 500. Total is 500. So 500 minus our RAR, which is 385.27. Therefore, the impairment loss Therefore, the impairment loss will be equal to how much? The impairment loss will be equal to how much? 114.73. So this is 114.73. 114.73. So remember, you must always work with what the examiner wants you to do. So in the requirement, number one, they wanted us to calculate the impairment loss to be recognized in the accounts of 𝐂𝐶𝐻 Limited. And then number two, explain how the loss will be treated in the financial statements for the year. So in this case here, of course, we have what we call a cash Solomon tool. This is a cash generating unit. A cash generating unit, a CGU, assets, and then they have given us a block impairment loss. We have many assets, 3 assets basically here. So our 3 assets here, which ones are these? We have goodwill. We have goodwill of 70 bob. Goodwill of 70 bob. And then we have, in this case here, land and buildings. So we have land and buildings. Land and buildings. So land and buildings. Land and buildings. 320. And then we have machinery. Machinery from the carrying amount, machinery is 110, which in this case here gives us 500. Which in this case here gives us 500. Yeah, Caroline, thank you very much. How do we treat note 2? You'll be able to see how I treat it here. You'll be able to see how I'll treat it here. Those are the kind of things now we should be doing in this class. Allow me to just write this here. Allow me to write this here. So we have goodwill. We have land and buildings. We have machinery. So this is 70, 320, 110, give me 500. So remember, these are the cars, the carrying amounts. So create a column in between for impairment loss. And the impairment loss, in this case here, you've told me that the impairment loss is 114.73. 114.73. 114.73. 114.73. So remember now, this impairment loss must be distributed to the assets. So impairment loss will be distributed to the assets in the CGU, in the cash generating unit. However, remember, remember, this is very, very important, that goodwill must absorb the maximum impairment loss before the balance is, in this case here, apportioned to the other assets. Is apportioned to the other assets. So before you do anything, ladies and gentlemen, ensure that there is no way. You will tell us that you are impaired, and then you tell us that you still have some goodwill. The moment you are impaired, your goodwill should be extinguished. So in the hierarchy of distributing impairment loss, the very first asset to suffer is goodwill. So goodwill in this case here must absorb. So like now here, fortunately, we can see this 114.73 loss covers this goodwill. So it means that goodwill takes up how much here, somebody? 70. Goodwill takes 70. So then what is, ladies and gentlemen, what is the balance? After what is the impairment loss balance? Net impairment loss, net impairment loss after distribution to goodwill. After distribution to goodwill, the net impairment loss is 114.73 minus 70. Minus 70. Are you able to give me this figure? Minus 70. After distribution to goodwill, because goodwill must be extinguished. Goodwill must be extinguished. So this gives us 44.73. So this 44.73 is to be apportioned, to the remaining assets, to the remaining assets. Remaining assets using car proportions. Using car proportions. So the 44.73 is to be apportioned to the remaining assets, using the car proportion, this carrying amount proportions. So which assets are remaining? Which assets are remaining? So the remaining assets, ladies and gentlemen, here, the remaining assets here we have, of course, now goodwill is extinguished. Now we have land and the building. Now we have land and building, and then we have the machinery. Right? Their car amount, this is 320, this is 110, giving me how much, ladies and gentlemen, the total carrying amount of the remaining assets. Total carrying amount of the remaining assets. What do we have here, ladies and gentlemen? So we have here 430. So meaning that impairment loss will be 320 over 430 times this remaining. This will be 110 over 430 times this remaining. Times the remaining. So basically the remaining carrying amounts get fractions, proportions. So 320 over 430 times that, 110 over 430 times that. So I have from 3, but the first one is supposed to be 33.29. Here, 33.29. 3.29. All right. How about machinery? So machinery, what do we have here for machinery? Machinery will be this times that. What figure do we have, ladies and gentlemen, for machinery? I think I've lost some of you. So remember, I know we have very, very many new students here. We are selling these courses here at really an affordable price. So in this case, here, ensure that you are calling this number. Ensure that you are calling this number 0719 525,000. 0719 525,000. This is the number you call to buy our courses. So when you buy our courses, you're buying this Zoom, and then of course you're buying our LMS videos at Kenya shillings 4,800. Kenya shillings 4,800. And then I'll come and give me the last column, which is the new carrying amount. The new carrying amount. Give me the last column for the new carrying amount. For the new carrying amounts. So the new carrying amounts, what do we have here? New carrying amounts. The new carrying amounts. So 70, 0. Goodwill is extinguished. Goodwill is extinguished. Because remember, loss is the impairment loss, you reduce the value. So you're subtracting. So the net. So like now, this one you subtract. What is the net? Somebody here, land and buildings. Land and buildings. So what do we have here? 286.71. 286.71. And then machinery, 110 minus 11.44. 110 minus 11.44, which gives us 98.56. So this gives us 98.56 like that. Thank you very much. Great. And of course, if you wish, you can add this. You can add this, which will be the same as plus minus this. Which will be the same as this minus this gives us what value? 385.27. 385.27 like that. 385.27. Thank you very much. 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 So before I explain now how we use this note number 2 that Carol asked, I would want to know whether we are really together, all of us up to here. It's very important for me to get that feedback. Are we together really up to here? Okay. And then remember these things you watch. Like now when you go to watch this video second time. Now this one you can use a speed of what here? Even a speed of 2 because my students are fast. In the market, I normally have very fast students. So everything of yours is fast. Times you put 1.25, 1.5, or a speed of 2 like that. Now, ladies and gentlemen, remember that impairment loss is charged to the P and the L, or to the revaluation surplus account. So do we have any asset that has got any revaluation surplus? Look at note number 2. Look at note number 2. So remember now, we are looking at how do we charge this P and L? How do we charge this total? How do we charge this 114.73 according to IAS 36? So we have in this case, if you look at note number 2, the land and the buildings are carried at a revaluation. The surplus relating to the revaluation of the land and the buildings that remain in the revaluation surplus reserve as this date is 65. So fortunately, that 65 can cover our land and buildings impairment loss. Yeah. Can cover. So in this case here, we're going to debit in this case here, revaluation surplus for land and buildings. Yeah, land and buildings with how much here? With 3.29. Fortunately, this is less than 65. Remember that account, the revaluation surplus has 65. So fortunately, our impairment loss is well within that 65. And then, ladies and gentlemen, we shall come here and debit the P and the L. Yeah, with this impairment loss, with the impairment loss for goodwill and who? For goodwill and machinery. So in this case here, this is 70 plus 11.44. So is there somebody who can give me this 70 plus 11.44? This will give me what here? Somebody 81.44. And then of course we shall be able to come and credit everything to our property. We shall credit everything. We shall credit in this case here two assets there. So we credit the goodwill account, and then we credit our PPE. So credit, we goodwill, of course we are extinguishing the whole of it with 70. And then the property, plant and equipment. What are their property, plant? You know, this is the property, plant and equipment. This property, plant and equipment. You can see the impairment losses are here. 33.29 plus 11.44. If you wish, you can write them separately. Say credit land and buildings, credit machinery, if you wish. So that 3.29 plus 11.44, this will give me how much in total. Or the board is not clear. Sorry for that. The board is not clear. Thank you for raising that, because we are also producing videos for future generations. So that's what I could do at the very best. Great question there. So then this gives me 44.73. 44.73. 44.73. And that now marks the end of that question. So a good student is asking, what if in this case here, for example, this revaluation, or rather these land and buildings, for example, what if we had 70 here? If we had 70 here, can someone tell me, if we had 70 there, what would have we done, knowing that revaluation surplus is only 65? If we had 70 there, what would have we done? Knowing that revaluation surplus is 65. So that I would have debited, I would have, you can't eat, you would have eaten the revaluation surplus in full. So debit the revaluation surplus with that 65, and then the balance 5 to make it 70 goes to the income statement. So in that case here, for this particular land and buildings, we would have debited the surplus, the revaluation surplus is 5, and then for that land and buildings, that extra impairment would have gone to where? The income statement as a debit. Because you basically utilize the revaluation surplus first before you take the excess to the income statement. I hope Vinny have answered you. Great. Thank you so much. So, ladies and gentlemen, that is the end of our today's session. So what are we expected to do before our next session, in between the week? Let's agree. How many videos should we watch in the LMS? Before our next week? I saw some students asking for a third lesson. Trust you me, this AFR, you don't need a third lesson. No. What you need is more of what your videos, because of the speed. There is no way you'll be able to make me live. In this case, I come and speak like blah, 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 very fast. No way. But the video can push the video speed up. So that these 2 lessons that you are meeting, ladies and gentlemen, they should be more than sufficient, because it's about answering your technical questions. Yeah, Faith, that's a good question now. Which contact should we reach? So just go to your WhatsApp. Go to your WhatsApp and tag me. But of course, these guys here will be able to come at around 8 a.m. So just go to your WhatsApp paid group and tag me. My personal number is this one. Tag me. You tag me. It's my work. As the CEO of RCM to ensure that you have served well. It's my work. All right. Any other question? Now you can bring those other questions here. But what I can assure you now, ladies and gentlemen, first of all, even before I give you an assurance, the student who watched this video before coming to today's class, how has your experience been? If you watched this video before coming to today's class, how has your experience been? Smooth. Easy. I'm telling you, this LMS, and it's good I got some students the other day who told me, Mwalimu, were it not for the LMS, AFM, I would not have passed. Yeah, excellent, yeah. Beautiful, it's flowing, yes. All right. So the only thing now I want you guys to do, starting with the Gamba, and I can see these other ladies there, please ensure that you are whipping everybody to watch the videos, to avoid us wasting time. So that when I come here, ladies and gentlemen, this semester, I'm even going to be giving you exams. You'll be surprised. Like I could come like now next week on Monday. Instead of coming in this case here to class to just teach directly, I just come with one question, like a test, give it to you. And then I give you exactly 37 minutes, because you're not supposed to take more than 37 minutes to do one question in class. So I give you like this first 37 minutes, try this question. Then we see who will have answered. And you can only answer such questions very well, ladies and gentlemen, if you watch as many videos as possible. So not even define like, let's watch 3, let's watch 5. No, let's just put our best feet forward to be able to do maximum with this learning management system. I know we are time pressured. I know some of us in this case, like Monica said here, which is very, very genuine. Like myself, I'm also working full-time elsewhere. I mean, at times, In this case here, you do not have time. All right. But trust you me, with some little push, with some little level of perseverance, we must endure pain. In this life, we must endure some pain. We must cut on our sleep. With some little looking for time here and there, you will be able to watch those videos. Like myself, what I do, even in terms of preparation, like when I'm at home, and simply at times I'm tired, I just put on my TV, put on this video. You put on this video, and then instead of watching those like useless programs, just like 𝒂𝐨𝐮𝐫𝐬𝐞𝐬, all right? Watch this thing at home. Over lunchtime, instead of going to eat like a big bone like this, you're fighting with it for a whole hour. You can, in this case, take a light meal and use like 20 minutes here to eat. The other 40 minutes, in this case, you just go and lock yourself somewhere. You're watching these videos. If it is leadership and management, you do the same. You do the same. Especially leadership and management, you can just put on your earphones and then you are at work. I mean, you'll be able to do a lot. You'll be able to do a lot. Yeah, Jerry, remember, I've given you those videos the way they are following each other. You watch them the way they are following each other. Like now, I expect when you move, you'll be able to see share-based payments. You just move on and be taking pride. After you watch a video, put thumbs up there in WhatsApp. Tell people, you know what, I've watched this video. When you watch a video and you're not able to understand, in this case here, you tell me right away, I've not understood this. Mwalimu, do you have like 20 minutes during the day? Even if it's during the day, I normally do one-on-one classes. Yeah, I'll simply send you a link. I want us to be proactive this semester. This semester is not even about waiting for Mwalimu. We have to be very proactive. Mwalimu will be here, especially when you're doing this in a group like I was doing last semester. And then you are stuck, for example, watching a video, there's a concept you're not able to understand. You simply tell us, Mwalimu, send a link. We are free at this time. All right? And I'll be able to do that exactly. We don't have to wait like Monday to solve a problem. No. We shall solve problems as they arise. We shall solve problems as they arise. Is that okay, ladies and gentlemen? Can we disappear now? Do we have any new students? Do we have any new, a friend of mine? Is it possible you call me after this? That's a very, very serious question, Frau. Yeah, you can amend 𝒂𝐿𝐿. You can amend, although I have to ask the developer, you can amend. You can amend your name, because I'm telling you, those certificates are very, very important. And ensure that you write your names in full. You write your names in full. And when you get them, please take them to LinkedIn. Say that now I've just finished attending my financial reporting classes. Now I'm perfect in terms of what your IFRS standards. Again, ladies and gentlemen, as I sign off, most students who are clearing CPAs do not know how to brand themselves outside there. Great. They don't know how to brand themselves outside there. If you know how to brand yourself outside there in social media, you can never go wrong. This is very important for everybody. Please listen to me, because I follow some of you. I follow some of you on Facebook, on TikTok, like this lady. What is her name? I'm forgetting. Yeah. You guys are doing great things. But trust you me, most of the things you are doing there on social media, you have not understood how social media works. Because like now you can't tell me that you're now on social media taking a photo just like this, just saluting like that. And people are telling you that you're beautiful. So what? If I were you, I would put that photo and even ensure that I put the very best of filters, right? But down there, I'm signing, like if you want any tax consultations, my name is so-and-so, and this is my number. You do that in LinkedIn. You do that in Instagram. You do that in all over. At the end of the day, if you start branding yourself like that, then automatically you will not even be able to handle the inquiries in the future. Even if you're working, when you're working, you don't have to like disclose like you are marketing yourself. No. You can simply be putting, at times you're putting like now, you can go to your LinkedIn and say that today we have learned about IAS 36. And I know that recoverable amount is the higher between this and this. And then you leave it like that. Now with your photo doing like this. All right. You will come to thank me later. Most students, CPA is a very, very good course. If you know how to brand yourself, very soon, you'll get yourself being a CFO, you'll get yourself being a CEO very soon. If you know how to brand yourself very well, and then of course, we must also work on our public speaking skills. we must work on our public. I wish we can even have this class. Once we start using our LMS very well, once I realize that we are using our LMS very well, that means that we have a time, even if it's over the weekends, we should be able to introduce public speaking classes like yesterday. Because as an accountant, you are a reporter. You're going to give an opinion, audit opinion or whatever. Then you have to be in a situation of being able to communicate excellently. And your English does not even have to flow very well, but the level of confidence should be very, very high there. Because the moment you are good in public speaking, you are able to do short videos and you're posting up there. I'm so sure you as my student, I'll be able to count you as an asset. I'm so sure in future, of course, I can't go for presidency, I can't go for politics. I'm not beyond that. Myself is to simply work hard and we get like as many students as possible doing CPA, doing CPA at RCM. Then I'll be doing very well. So, but assuming I was to go for presidency, those students who will be very good public speakers will be my greatest assets. But if, for example, we have those students in this case here, for example, we have a problem with she, C, like that. You see now this is automatically a big problem. Another one in this case, will be having a problem between R and what here? L. All right. You know, this is a very important talk that even what we have done in the morning. That I'm not the bridegroom, I'm the bridegroom's brother. Now, and you're an accountant. These R's and L's, those are things that you can be able to solve right now before you reach up there. Thank you so much, ladies and gentlemen. Have a lovely day as you ponder about, in this case here, what you have spoken about this morning. Thank you. Yeah, like Toastmaster is very good. Useme Kabila, this thing is a disaster to everybody, I'm telling you. And we shall be able, so Toastmasters, yes, but also as an RCM, we owe you guys this skill. This skill should be, in this case, imparted in everybody. Everybody has to be a good speaker. Everybody must be a good speaker. Thank you so much. Yes, I'll be able to post. Yeah, I will be able to involve you. Yeah, I mean, this is very important. Like those days when I used to be doing public speaking at Toastmasters, most of these great Toastmasters here, of course, like Mukisa Kitui was a Toastmaster, PLO Lumumba. You know, these rich people, they know that learning English and public speaking is supposed to be a continuous exercise. Some of us, for example, you went to some national school and you think that you're a very, no. It's supposed to be something that you continue with till you die. Even when you are 70, even when you are 80, you should be practicing public speaking throughout. Because it is a skill that will make you the best negotiator. It is a skill that will make you be paid 2 million Kenya shillings when others are getting 400,000. It is a skill that will enable you be at the front desk, even as an accountant, as a CFO, COO, or even CEO. Bye. Thank you, bye.